Hi, Niro Pillay here from Investment Rise. And today I want to look at the biggest mistake people make when buying an investment property. Do you want to know what that is? It's quite simply this. It's investing in an area where the capital growth has already been, rather than investing in an area where the capital growth is coming. Now, when I say that, it might seem like, oh, that's ridiculous. Of course you want to invest in an area where the capital growth is coming. And although it makes sense rationally, and although I always say to people, investing should be a very unemotional thing based on numbers and data, ultimately though, there is fear, there is emotion. And so often people will say, well, I want to invest in this area because it's had so much growth. And I think people have made so much money that now I want to get in. But that's too late. If you've seen some of my earlier videos, one especially called the next wave of growth, I talk about how amateur investors get burnt because they invest after all the growth has happened. But strategic investors invest in areas just as the next upswing is happening. See, I'm a sports fan, so let me give you a bit of a sports analogy. I love all kinds of sports, and one of the sports I'm fascinated by, although I've never really got into it, is ice hockey. One of the greats is a guy by the name of Wayne Gretzky. Now, Gretzky is to ice hockey what Michael Phelps is to swimming, or Roger Federer is to tennis. He's one of the all-time greats. And people often asked him, what is it that made you so good? And he said, I don't skate to where the puck has been. I skate to where the puck is going. When you invest, you need to invest not where the growth has been, but where the growth is coming. There's no point chasing the growth. When an area's already had good capital growth, it's gone. You can't chase it, you can't get it. You need to be able to anticipate where the next growth wave is coming and invest there. And if you've seen any of my videos, I've outlined a lot of reasons why the next growth wave is coming in South East Queensland. About a 40-minute radius around Brisbane, not all areas, but many of them. And the only exception to that is further up north to the Sunshine Coast. But people say, look, I understand that that's the next growth wave based on cycles and the fact that Sydney's had its capital growth and now Brisbane should happen next, but what are the other reasons? Why else is South East Queensland expected to grow? So let me look at some of those reasons. Number one, population movement. For the first time, we're having a massive domestic migration exit out of Sydney, out of Melbourne. It's going up north. When I say the first time, it's the first time in quite a number of years. Why is that? Well, for example, people who own their own home in Sydney have said, wow, that's a huge growth in Sydney, but I still have this massive mortgage. So for example, my home is now worth $1.5 million, but I still owe $500,000. Well, let me sell my home, take my $1 million, go up north, buy a home for cash for say $700,000 and put 300 grand in the bank. Smart move, right? From a financial perspective for them, absolutely. And so what's happening is therefore, as people start moving up north and taking Sydney money, taking Melbourne money up there, it's starting to drive prices higher. Secondly, the vacancy rate in many of these areas is already low. And so with more people coming in grabbing the properties, it's becoming even harder for tenants to get a property and rent a property, which is exactly what you want as an investor, because those are the kind of areas you want to be buying in. So we've got population movement, we've got really low vacancy rates, we've got the whole property cycle scenario, which South East Queensland is now on the verge of getting that growth, and some areas have already started. Plus you've got massive infrastructure. Like there are certain areas where I'm directing my clients to where the population is set to double or triple in the next 20 years. That's phenomenal growth. Combine that with billions of dollars worth of infrastructure, and I literally mean billions, and you've got all the hallmarks for some fabulous capital growth. And for a price point where you can still buy a house for about $500,000 depending on where you're getting in, compare that to Sydney. So if you want to be an investor who wants to take a risk, if you want to be risky, then buy in Sydney. That might sound a little odd, but seriously, when you're buying in Sydney in 2016 or 2017, whenever you're watching this video, I believe you're taking a gamble, you're taking a risk, because you're buying in an area that's had huge growth, 65% capital growth in 4 years. It's just not sustainable for the next 4 years. So you're going to go against the tide. You're going to take a massive risk and buy at a massive price point. You're buying at the top of the market. Or you can be more strategic. You can invest in a much more safer manner, lower risk, better returns from a capital growth perspective, better returns from a cash flow and rental perspective, and start looking at key areas around Southeast Queensland. If you'd like some assistance with sourcing these properties in good capital growth locations with the right cash flow profile for you, as you know, one of my key beliefs, if you've seen any of my videos, is that an investment property should never cost you more than a cup of coffee a day. And right now I'm finding properties that's literally costing you zero, and in fact putting money into the pockets of my clients every single month. They're positively cash flowed properties. So if you'd like some assistance in getting properties in good capital growth locations with a good cash flow, click the link somewhere on this page depending on where you're watching this video, leave us your contact details, and I'd love to speak to you. Otherwise, if you decide to keep going and do your research, but please don't be the amateur investor who invests in areas where the capital growth has already been. Don't take that risk, don't risk that. Instead, invest where the capital growth is coming, be strategic, and I wish you all the success. Bye for now.